This episode was pre-recorded on November 7th. Please be aware that some facts may have changed. Welcome to Industry Focus, the podcast that dives into a different sector of the stock market every day. Today is Thursday, and this is part one of our discussion on the NextEra Energy family of companies. I'm your host, Nick Sciple, and today I'm joined by Motley contributor Matt Dilallo via Skype. How's it going, Matt?
Doing well. How are you?
I'm doing all right. We're going to talk about NextEra Energy today. Exciting company when it comes to renewables, the largest utility in the country when it comes to wind and solar generation. Renewables are really hot when it comes to interest of folks. There's a lot of kind of top of mind when it comes to solving carbon emissions and those sorts of things. But when it comes to the business of renewables, why is today such a great time to invest?
The costs have come down so much. It's been really exciting to watch over the years how, renewables needed to have government subsidies to kind of like bridge the gap between the cost of that and natural gas and coal. However, now the costs have come down so much as they've scaled that it's almost as competitive in a lot of places like wind, for example. That's right there with, natural gas and coal. So that's been so exciting to see is how much the costs have come down, and they're coming down even further. NextEra, as we'll kind of get into, I mean, they're so big in this, and they have their, kind of finger on the pulse, and they see it coming down, even more, so that this will be like the de facto source of energy going forward.
Yeah, when he talks about the cost of these inputs to renewable energy, the prices have really come down. That's why NextEra Energy's CFO, Rebecca Kujawa, has said that this is the best time for renewables development in the history of the company. In addition to falling costs when it comes to wind turbines and solar panels, another factor that has been really important is falling costs when it comes to battery storage for renewable energy production. Can you talk about how important that is to the renewable energy industry and then to NextEra Energy in particular, maybe?
Yeah, so one of the issues that renewables have faced over the years is it's called intermittency. The sun doesn't always shine, the wind doesn't always blow, and obviously the sun's not there at night. So it doesn't provide what they call in the utility sector this base load power, what you get from a coal plant. That's going to continually generate power day and night. So in order to offset that, there's a couple ways they can go. They can build these what are called natural gas peaker plants, and that's to kind of fill in the gap. And they're more expensive, because you have to build this whole plant to fill in the gap. The other option is energy storage. So you think about, your battery for, flashlight, whatever, it's energy that's stored in there. To scale that up to do a utility scale is very expensive. However, there's been so much progress with like what Tesla's doing with batteries and just scaling batteries that the costs have come down so much so that NextEra is putting them on 50% of their wind or 50% of their solar projects this year, which is incredible because they used to, didn't do any. And they see the cost of this coming down so much so that probably by 2023, 2024, it'll be cheaper to have like a solar plus energy storage than it will be for coal, nuclear, and even the most energy efficient natural gas plants. So it's just an incredible breakthrough that we're getting. Really, a lot of it has to do with scale. There hasn't been a huge technology breakthrough, but just as they're building out the plants to build these, it just brought the cost down.
Right. And I mean, a big part of pushing us to that scale has definitely been the subsidies that have pushed into this sector, have really encouraged folks to invest. And as you mentioned, we've kind of hit this point where the volumes are such that, costs are really starting to come down and they're becoming economical, which creates an opportunity for utilities like NextEra Energy. All right, Matt, on the back half of the show, I want to dive in a little bit into NextEra Energy's business itself. There are a few kind of operating businesses under the NextEra Energy umbrella. Just first off, can you introduce those to us and kind of what they do from a high level?
Yeah, so investors need to kind of think of this company as more like a holding company because they own, as you mentioned, there's two utilities. So utilities, we're used to them. We pay our power bills, our electric or our gas bills to them. So they own two of them in Florida. One's Florida Power and Light. That was like the Florida Power and Light's kind of what got NextEra started. That's, one of the largest utilities in Florida. So it gets it makes its money by distributing electric and gas to customers in that state. And with Florida being a growing state, it's a steadily growing business. So, a really core business there. And then they just bought Gulf Power, which is another Florida utility kind of on the other side of the state, near Tampa. And it's very similar business, regulated. This one tends to be more focused on your fossil fuels, a lot of natural gas, a lot of coal, actually. And so that's their two utilities. Then they have what's called NextEra Energy Resources. And so kind of when you think about NextEra, that's the business a lot of investors now think about, because it's called a competitive energy business. What they do is they develop wind farms and solar projects that they'll sell the power to other utilities and other corporations. And so they get these fixed price power purchase agreements, and they make steady income with that. So, and then they've got some other little businesses on the side. But that's, kind of like your two main focuses there. You got your utilities and then your competitive energy generating business. It really fits well together. It makes for a really good core energy company.
Sure, and I guess when you're looking at the utility part of the business, they're actually selling the energy they produce to the end consumer, whereas you look at that other part of the business, their customers are more likely to be, a utility that they're selling power to that will then sell that on to the end consumer. Would that be a fair characterization, Matt?
Yeah, definitely. That's what it is.
Okay, cool. Let's talk about the utilities part of the business first. Those. It's a regulated business, so it's a regulated monopoly. You've got a pretty reliable customers. Folks aren't going to turn off their power anytime soon. But when we look at the renewable part of the business that they're focusing on, particularly the Florida Power and Light side of the business, on wind and solar, just being in Florida, the geography they have there, how much bigger of an opportunity does Florida Power and Light, NextEra Energy have in the renewable space than maybe a utility that isn't located in such a sunny, warm part of the country might not have?
Yeah, I mean, being located in Sunshine State is definitely a competitive advantage if you're looking for solar. And they're really taking advantage of that. They just put out what's called their 30 by 30 plan, which they want to install 30 million solar panels by 2030. It'll generate 10,000 megawatts of incremental solar capacity. So it'll provide all this clean energy to Florida's grid. It will help reduce emissions in the state, and based on where power prices are, it'll actually help reduce customer bills, especially as they added some of the energy storage that we mentioned. That'll reduce the need for these peaker plants. And so it's a really great opportunity for them to grow and take advantage of not only the sun, but there's still some subsidies that they can take advantage of and falling costs. So great opportunity for them.
Sure, you've talked about how Florida is a growing state. One other thing to be concerned of, and management has called this out as a place where they're investing, is, hey, Florida's warm, sunny. It's also on the coast, which is where hurricanes kind of affect this area. Can you talk about how the business has been investing to kind of manage that and how that factors into their long-term plans?
Yeah, so utilities are typically known as like the safest investments you can, hold in your portfolio. They're typically, retirees will hold a utility because they pay these steady dividends. However, as investors have unfortunately learned, utilities are not risk-free. Those who hold Pacific Gas and Electric over there in California have learned with the wildfires that, there's no risk-free investment in utilities. And that's the case here with NextEra. Hurricanes, especially, we've seen with climate change concerns, hurricanes seem to be getting worse. They seem to be coming more often. So the company is really trying to hit this head on. They want to invest $3 to $4 billion over the next few years on storm hardening, and what that'll primarily be putting power lines underground so that they don't, get knocked over by the wind. So they're trying to get ahead of this, but hurricanes are just can be so devastating that a hurricane could hit them maybe a quarter or two. They might have to rebuild some things. So it's something to keep an eye on for investors. Yeah,
one of those things to think about that, for some of these businesses, geography really can matter both on the plus and the minus side when it comes to things you need to be aware of with the business. Kind of moving on to the NextEra Energy Resources part of the business, that's where you see a lot more of this growth. I believe their most recent quarter, they grew 23% year over year. When you take a look at this business, it really seems to have been, really starting to take off. What are the biggest opportunities there for them, and how are they, going about pursuing that?
Yeah, so this is their business where they basically work with other utilities and other corporations to basically build to suit almost a wind farm. So, for example, one of the interesting projects they're working on, they announced it earlier this year, is with Portland General Electric, where they're doing wind plus solar plus storage. So it's the first hybrid, with resources that is out there. So, they're selling this power that they're going to produce from this to the Portland Gas and Electric. So it's projects like those, and then they'll build wind farms for corporations that are backed by these long-term power purchase agreements. Same thing with solar. So they look to capitalize opportunities where customers want renewable energy and they're willing to pay for long-term contracts.
Sure, and you bring all that together, and you're really showing on the financial side of the business really strong performance relative to the rest of the sector. The company expects to grow earnings at a 6 to 8% compound annual growth rate, and is calling for dividend increases of 12 to 14% a year, at least through 2021. When you compare those numbers to its peers in the utility sector, really attractive there, Matt.
Yeah, it's really interesting to look at the numbers because, as we mentioned, Florida Power or NextEra is one of the largest utilities in the country. However, it's growing faster than a lot of its larger peers. So two big ones that a lot of retiree type investors would probably look at is like a Duke or a Dominion. So Duke, for example, is growing their earnings 4 to 6% per year through 2023 is what they're targeting. That would likely lead to a similar growth rate in their 4% yielding dividend. Dominion, on the other hand, is looking at 5% per year through 2023. And that's actually down from their initial view that grows 6 to 8% per year. However, dividend growth there is only 2.5% per year. And a lot of that's because they have a larger payout ratio. So, you have much slower growth from there, a little bit higher yields, given that NextEra has 2.2% at the moment. But that growth is one of the reasons that is outperformed not only as utilities, but a lot of the stocks in the S&P 500 over the years. And I think that's what's going to help it outperform its peers going forward.
Yeah, another place you might want to compare NextEra Energy to the rest of the sector. We talked about their massive share of renewable and the opportunity that gives for them as we move the grid more to a renewable focused energy production. NextEra also, relative to the rest of the sector, has way less of a representation in coal. Can you talk about, does that create opportunities for NextEra and that they don't have to shut down these coal plants and invest in renewables because a large portion of their output already is in, where the market is going towards? So how does that lack of presence in coal, at least relative to their competitors, differentiate NextEra?
Yeah, it puts them at it's a competitive advantage that they have. They started this shift years and years ago, and so they're already ahead of the game. We see a lot of more coal-focused utilities, putting out these bold plans. Hey, we're going to be 0% or net zero for carbon emissions by 2050. And, NextEra is way ahead of them in that. And so they can focus their efforts on growing earnings, whereas a lot of these companies are focused on reducing carbon emissions first, and that should grow earnings, and that's why you're getting this difference in growth rates. Like they're already way past that, so it's really helps them going forward.
Right, they just don't have the distractions of having to remake their entire portfolio, which has to be attractive to you from a management point of view. So I just ask you, Matt, with the advantages when it comes to the portfolio, with a faster growth rate, located in a geography that has a lot of attractive characteristics when it comes to people moving there, when it comes to ability to kind of capture renewables, why would I buy a utility that's not NextEra Energy today?
I don't know. I own NextEra Energy, and one of the reasons I do own it is because it helps me get that. I have my money in it, so I'm really focused on what they're doing. So I'll force myself to read the conference call transcripts. However, like we mentioned earlier, there's no business that doesn't have risks, and NextEra, they're investing a whole lot of money going forward to build out their business. They're investing, like I mentioned, storm hardening, renewables. So that I think the biggest risk for them, and the reason I would, investors should still be mindful of, not over allocating or anything like that, is they need a lot of money to do this. And with paying a growing dividend, that gets harder and harder. So I would keep an eye on how they're financing risk. And, we're going to get into this in the second part of the show, NextEra Energy Partners. That's one of the ways that they finance their business. And that, that's going to be a risk to watch, as we'll see later.
Yeah, so folks that like this first part of the show, next week we'll have part 2 of our discussion of the NextEra Energy family of companies, where we'll be discussing NextEra Energy Partners. Until then, Matt, thanks as always for coming on the show.
Thank you for having me.
As always, people on the program may own companies discussed on the show, and the Motley Fool may have formal recommendations for or against the stocks discussed, so don't buy or sell anything based solely on what you hear. Thanks to Austin Morgan for his work behind the glass. For Matt Dilallo, I'm Nick Sciple. Thanks for listening, and Fool on.